Friday, October 16th. We're going to go over alpha picks. I did a lot of work in AI yesterday. We're going to look specifically at small caps. We will also look at some markets. I'm going to take you down a road of just a couple of things, where I look, how I find things, what specific stocks. We're going to look at Eric Jackson as a new stock that he's touting, and it was way up yesterday. When you do research, I'm going to kind of show you what I did yesterday with Seeking Alpha. So if you don't have Seeking Alpha, you should take your tool and put it through this, and we will compare AIs. We will also compare AMD to NVIDIA, because that was a big one. But specifically, I'm going to take a question that I had yesterday and put it through Sidekick and Seeking Alpha's new AI, just to see who gives me a better answer. Well, we'll look at the October watch list. I'm going to give you the ETF that I gave everybody, the paid members, because we're at October 16th. It's up like 10%. There's a lot in that watch list. We also had earnings. There is key earnings today that kind of points you towards where we're going. But here's QQQ. We talked yesterday how the 4-hour algorithm got you out at 4%, a 4% gain from a buy that was back in the beginning of September at $580. We've dipped down. Now, if you look at a monthly chart of QQQ, we're still green. Again, we are still green. Will October wind up green? Who knows? It's a tight trading range. So even though you may feel like, ooh, October all of a sudden is a bad month, it's not. We haven't had a red month since, March. It's been a good market. So before you start worrying, understand, when in doubt, zoom out. And I went live yesterday on Substack, okay? dailystockpick.substack.com. It's my newsletter. I went live yesterday. We did some alpha pick scalping. Okay, there are rules to this, but let me just say, the actual pick is a large cap stock. Okay, it's up 126% year to date. Steve mentioned in his analysis that I did with him, if you go down here in the newsletter and you watch this episode, he mentioned in his analysis the PEG ratio. The PEG ratio is key. This PEG ratio is super low, still super low. It's a strong buy in the quant. It is one of the top quant rated stocks for a long time. It's a large cap stock. I'll add in that if you bought this using the 4-hour algorithm, and I have this little snippet of a chart because I can't show you the full chart because it's an alpha pick, but just FYI, as it moved to a strong buy in the quant, and you bought this one back in August on the 4-hour algorithm, which does outperform buy and hold on this particular stock, you'd be up 55% in 41 days. Again, using the tools that you have in front of you. Many listeners who joined live with me, they were talking on that string on the live broadcast. Oh my God, I already own this one because it's been so good. It's a top stock in Seeking Alpha, and the 4-hour algorithm has you in. A lot of listeners, they're finding good companies with good products and good profits and good management. I was not in this name. Full disclosure, I did not use my tools correctly. I was not in this name, but I bought quite a bit yesterday because I believe Steve Kress. The fundamentals on this company are good. The PEG ratio is super low. Again, the tools work. The tools that I have work. And so I went in yesterday afternoon and I said to, Seeking Perplexity, hey, can you analyze the Alpha Picks portfolio? And I said, give me an idea of where they are invested and what sectors. 31% information technology, 30% industrials, 13% consumer discretionary, 13% financials, 3% consumer staples, 2% materials. That's a key. Remember, the gold stocks that they've been going into, you add 1% of that. So of the whole portfolio, it's only 2.98%. Healthcare is 1.31. Communication services is 2.36. So again, I'll provide this pie chart for anybody that's interested. But remember, Alpha Picks, it's a data-driven portfolio. I have been using it for the past probably year as a portfolio. Before that, I used it as a stock picking service. I did not outperform the portfolio. That's why I like the portfolio. My particular Alpha Picks portfolio was up yesterday 2.2%. But remember, I'm adding to winners and cutting losers. So if your portfolio wasn't up 2.2%, it doesn't mean you're not following Alpha Picks correctly. It means that I probably have different holding percentages than you do. But I also missed out on the big winner. Let's talk about one. I brought this one up yesterday. SSRM, it's an Alpha Pick. Okay, I sold here at about $23 when the 4-hour algorithm told me. Where's it trading today? It's trading at $25.80, almost 10% upside. I missed out on that as a larger position, but I just pulled it back to the holding position that they have in the portfolio. And if you go over here to Alpha Picks, you'll see it. There's a portfolio section. I can't go on it here on this podcast. I am not allowed to protect the portfolio. That's it. So understand, yes, you can use AI to analyze the portfolio. You can ask it, hey, does this one have a chance to win? Because again, I am bringing up small cap stocks. One of the things that I did yesterday, small caps should outperform. They have been at a historic low. So they have underperformed the regular market. They are starting to come back. The thought process is, as the Fed lowers rates, small caps should start to grow more. Okay? And so I went into Perplexity and I said, hey, can you give me the top year-to-date gainers in the Russell 2000 that are unprofitable? And it gave me some great points. Perplexity explains it. Over 40% of the Russell 2000, and if you want the ETF, it's IWM, as in Mary. 40% of that are unprofitable companies. So it is common for major gainers in this index to lack positive earnings. Doesn't mean you throw them out. Names like Carvana, IONQ are examples of unprofitable small caps that have delivered outsized return in the recent years. Perplexity explains it. Am I comfortable going into IWM knowing that 40% of that doesn't make money? No. And that's why I like Alpha Picks, because it gives me access. Steve Kress, his team, they do the research. And so while they might put an unprofitable company in there, I don't think they do, actually. I think they actually rely on earnings. Like IONQ, great example. IONQ is one that actually has revenues. Let's put it in here. Do I have to sign out? Hold on one second. I think I may have to sign out. No, IONQ, there we go. If you go to financials, you can see the revenues, but there's a lot of them. Like Oklo has no revenues whatsoever. This has 52 million in the trailing 12 months. You go to summary, it's $21 billion market cap. For what? 52 million in revenue. That's expensive. So that's why I like somebody picking my stocks for me. And again, they tell you when to sell. It's just one of the great things that I have in my portfolio. And FYI, if you don't think that small caps are going to outperform, look at the 4-year breakout that's happening. Because we're seasonality. We're getting into October, November, and December. And if you just want to look at IWM, let's look. Let's pull it up. If you have TrendSpider, you can pull up the seasonality. And we don't care about 4 years. We want to go back for, let's go back to 2005. Let's go back 20 years. Look, October, November, and December, one of the best 3-month stretches. In fact, November has a mean change of 2.98% over 21 years. So small caps, Again, Fed should be cutting. We should have that catalyst. I expect alpha picks to continue to outperform. Now, I want to take you on a journey, okay? Because a generation of people grew up watching The Big Short and Michael Burry. And everybody might say, hey, we're going to call the top. And again, Michael Burry is famous for this sell on 131.23 heading into a bull market. Okay, if you watch The Big Short, you understand they were right. They made a fortune. But what the movie doesn't really show you is the years that they lost money, that they had to continually raise capital in order to cover their short position because the market was going up. So a generation of people who want to call this top, they might be thinking that they're the next Michael Burry. I don't want to be Michael Burry. I want to be these guys. Okay? And you may laugh at this, but I have news for you. If you were even close, say 2 months after the crash, in 2008, these guys made out. These guys made out like bandits. Okay? These guys are probably not billionaires like Michael Burry, but for every Michael Burry, there's a guy who blew up his account and went broke. So let me head you down a path of some people maybe that you haven't heard about, but some people that I have followed. I haven't followed them into trades, and I've been wrong. Okay? This is Jason. I followed Jason for quite a while, and he has been in the Tesla trade since I should have been in the Tesla trade. He is rich, richer than rich, from normal guy to rich. He saw the opportunity. He loaded into Tesla. He made a small fortune. Okay. He's retired at 45, debt free, building his dream house. And he credits this to Mike Alfred. Okay. So let's go over to Mike Alfred's account and his top tweet. His most recent tweet from just 10 p.m. last night, he's telling you, I warned you about Celsius months before it collapsed. You guys know about Celsius. That one ran up crazy. I warned you about BlockFi. I warned you about kid analysts. I warned you about undifferentiated treasury companies run by event planners and influencers. I warned you about MSTY. Now I'm warning you that you're not bullish enough. You're not bullish enough. Okay? And he goes over everything he's invested in. You can see it right here on his tweets and stuff. So again, I'm not telling you to follow anybody into a trade that you don't agree with. But you have to just give some people respect as they make gains. Doesn't mean that you go in there and, IREN. I didn't load my entire portfolio into IREN, but I've loaded it enough that I'm pretty happy. I'm playing with gains right now. So, biggest movers. Let's talk about this. Let me go down my notes because I was going to take it. If you think the economy's bad. By the way, if you think that we're going down this road of a bubble, then why did J.B. Hunt, a shipping company, just report and up their guidance? It's up 12%, 14%. I mean, again, the economy seems strong. AI is leading the economy. But this is a shipping company up 12%. And it doesn't do well. Again, Quant says sell. Why? Let's look at it. J.B. Hunt has characteristics that have been historically associated with poor performing stocks. The company has operating cash flow of minus 5.89%. It means they couldn't cover their cash flow. They were losing 5.89%. Again, that's not a stock that you want to fall into. But maybe shipping might be picking up, which FYI, we're a consumption economy. If they're shipping more goods, that means we're buying more goods. And did you see HIMS yesterday? HIMS was up 16% yesterday. It was crazy. And I want to take you through a little journey that when you see something like this, I couldn't find any other news other than they're doing menopause treatment. I mean, that's the only, should that make you jump 17%? I don't think so. But say you had TrendSpider and you were looking at this stock and you were looking at it yesterday and you said, this is interesting. It jumped from 55 up to 56. And then it pulled back and you're making, this is a 5-minute chart, by the way. So this is for day traders. These are people looking for swing trades during the day. You got nothing to do. You pull up TrendSpider and you're like, I want to see some of the big movers of the day. Well, HIMS was listed as that. And then you get here and you've got confirmation. Again, you're making higher lows. That's a key because you're seeing an upward trending stock. Does it guarantee you? No. But I put that 63 in there and look at where it went to. How did I get that 63? Well, I think it's on the 4-hour. Yeah, I think it's on the 4-hour. Let me pull off this. The 63, you can see this one right here. Where does it pump to? 63. Am I buying at 62.79? No. I am waiting for it to turn this 63 into support. It already has 49 as support, so you know the range to buy it in. So again, that's how you use charts. And I don't think menopause is a way to push a stock by 17%. Maybe I'm wrong. But Eric Jackson, who had Open Door, who had a Carvana, again, people I like to follow, he's got a new one, hot. It's one of the most misunderstood stocks. He's quoting it, and he's doing it as part of his thesis today, his video today, hot. 4-hour algorithm beats buy and hold. It had you in at $20. You're at 53. Let's look at a weekly. Are we at the all-time high? No. The all-time high is 81. Can this one get back up there? Well, Eric Jackson says, I've taken a good long position in HUT. I think it's one of the most understood stocks in the market. Everyone still calls it a miner. I see it as an energy AI infrastructure platform that the market hasn't caught up to yet. Unlike my other two, Iron and Cypher. Iron and Cypher, the market has caught up to. Okay, and if you want to see some of HUT, go over to whatever tool that you use to rate it. It's a strong buy. It's a strong buy. It's up 7%. What does Wall Street think that it's worth? Wall Street thinks it's worth $34, 36% downside. Again, risk reward. Is this something you want to take the risk in? It might make sense based on the 4-hour algorithm which has you in. It wins 50% of the time. Again, 24 positions over 24 months doesn't trade all that much. It's already got a huge run up on it. Put it in a watch list. Have a strategy. On a pullback, start buying. It's the best advice. This one might wind up on the November watch list. And this is the kind of research. I want to take you on this one. Okay? This is the kind of research you should be putting your tools through. So I pulled up the top rated stocks. I just went down here in the left-hand corner, okay, of Seeking Alpha, and I pulled up top stocks. It pulls them up, Micron, COMM, and Newmont, Deutsche Bank, IM Gold, which I brought up before, Genworth Financial, B2G, which I brought up, Barrick Mining. It brings up that. I basically went to Perplexity and I said, hey, can you look through this page of stocks and use the symbol page to do some research, give a higher weighting to the stocks that are higher on the page, but find me a stock with revenue growth year over year of 20% and a PE that's under 20. Publish the list of symbols below. Okay? And it published some symbols. We went down this. And then at the end, the qualified stocks, COMM, Micron, Newmont Mining, IM Gold, EBR, EBR.B. I don't want either one of those last two because they are foreign stocks. I don't want to deal with it. But I'm in COMM based on a few articles that I read. This is one of them. Better Days to Come. This was just published on September 18th. That's about when I got into this one. Okay, it hasn't done well. It's down 6%, but my thesis remains strong on that one. And AI is kind of confirming that. And Steve Kress, even in this September 21st podcast, he went over COMM. Again, I have all of this lined up. So AI is confirming my thesis on COMM. On IAG, this is one that I gave as a buy back in January. The 4-hour algorithm currently has you sitting in a 96% gain just since January. Again, confirming it's a good stock. What's the next one? NEM. Okay, NEM is one where since July, it's got you in a 55% run. It's great. Remember, all of these stocks, every single one of these is a strong buy in the quant. So as a top stock, fundamentally, I don't care. I can go out and buy them on a technical aspect because fundamentally they are good. This is what you should be putting your tools to test with. Okay, I put Seeking Alpha to the test. I did this research. I like it. I trust it. Now I want to take you through one of the theses that I had, and it's AMD. Let me take you back to September 15th, and I'm going to show this to everybody. This was a paid tweet on September 15th. I bought AMD. Why? I laid out the 3 reasons. 1, Seeking Alpha stock has AMD at a buy. The fundamentals are very similar to NVIDIA, trading at around the same PE, but AMD growth is significantly lower than NVIDIA. That might be a bad thing, but I think AMD might be the more stable with upside from the perspective. Again, I'm taking you back to September 15th. NVIDIA has a $4 trillion market cap. If it doubles, that's $8 trillion. They would be the only company that has right now they're the only company that has a $4 trillion. It would be crazy to think that they can get to $8 trillion. I think that's going to limit the stock as well. If AMD doubles, the market cap goes to around $500 billion. So it's not even a $1 trillion company. And then number 3, I said the 4-hour algorithm has a buy around the current price level and performs well enough for a starter position. So again, I added to this. What did I do? I needed more cash because I didn't have enough cash. So I looked at my portfolio and I said, hey, Palo Alto Networks, it's not performing that great. And I went over this on the podcast. I said, once it hits 200, it kind of pulls back. And you can see that over a long term, the 200 point is just a pullback point. It doesn't seem to break out. Now, is it breaking out? It broke out all the way up to 217, and we've seen it pull back. So I took half my position in Palo Alto, and I bought some AMD. And again, I outlined this for everybody. Now, since September 15th, AMD is up 35%. NVIDIA is only up 1.2%. And I posted the chart, and we can just go look at the chart live. I don't need to post a picture for you. But AMD, you can see right there, 50% gain. And yes, I'm up 50% in this one. I looked at my portfolio. Again, a thesis works out to a position. And we can look at this live now. Okay, AMD versus NVIDIA, year to date, 97% versus 37%. 1 year, 52 to 38. 3 year, you start to get that. But again, I think AMD starts to catch up. Their chips are good, and they just I didn't see the OpenAI deal in there. I didn't know it. Just the thesis made sense. NVIDIA can't make enough chips. Well, guess who's going to buy AMD chips? If they start, Lisa Su is an engineer. She understands chips. And she was announced as CEO of the year last year, which I thought should have gone to Jensen. But again, she's a good CEO. So let me take you down something that I did yesterday. Okay? And this is just the thought process that I have. And today, we have Interactive Brokers doing earnings. Remember, Earnings Hub, you can go to Earnings Hub and look at all the earnings. I have my own, but I saw Interactive Brokers yesterday. And I said, you know what? Could it be that if they show incredible trading revenue, that we see Hood start to go up? Okay, I want to take a look at this because Hood in the 4-hour algorithm just got you out yesterday. And does that give us some type of indication that maybe Hood is starting to pull back to this 116? Could you get a better price? But if Interactive Brokers, we know people have been trading. We know you've been trading. So again, is Interactive Brokers going to go up? We saw the 4-hour algorithm just got you out of 18% gain. Where's the risk reward? Well, let's take a look at some AI tools, okay? Because I have Sidekick here. And I went in and I asked the same question. Will Hood go up with Interactive Brokers beating earnings tomorrow? Can you look at the history over the last 4 quarters? And it did. And just FYI, the analysis, I used the Karen analysis for this one. So it gets a little spicy. It wants to talk to the manager. I can't believe I'm saying this, but it appears that Hood stock has historically moved up after Interactive Brokers earnings of whether or not Interactive Brokers beats or misses earnings. The pattern defies rational explanation. Look at Q1, Interactive Brokers missed and Hood jumped 8%. Tomorrow, Interactive Brokers are reporting based on this bizarre historical pattern, Hood might move up regardless of Interactive Brokers' actual results. But I wouldn't bet my money on this irrational continuing indefinitely. If I were going to speak to the manager about this, I'd point out that this correlation appears completely random and shouldn't be relied upon for investment decisions. So my thesis is wrong. And that's what Sidekick is telling me. But then I wanted to use another AI and a new AI in Seeking Alpha. And I opted in for this, and I can go to the history and I can pull this up. And I asked it the same, I copy and pasted the exact question that I asked it, okay? And the conclusion, and it does a whole bunch of stuff. You can read all that stuff if you want. But based on the available data, there is no clear evidence of a direct causal relationship where Robinhood's stock price systemically rises after Interactive Broker beats earnings. Hood's price action appears to be driven primarily by its own developments, fundamentals, and market momentum rather than specific relation. So again, my thesis was wrong. My point, use the tools that you have. We have all these AI things around us. So if you have a theory, don't come to somebody like me, because I'm a douche on the internet. You don't know me. You know, my friends call me all the time and ask me. Guess what? I'm going to AI and asking. I'm a douche. Use AI. And FYI, you can do more detailed analysis, rating histories, and explore seasonality trends with Hood and Interactive Brokers. It leads you to a conversation. It is that good. And again, I love this stuff. And I spent hours going down these rabbit holes trying to find out opportunities. And if I don't find an A+ opportunity, I don't take the risk. It's about risk reward. And AI isn't going to lead you into a 100% win rate. There is nothing that's 100%. But the reality of this is take everything in your head and put it into your money and say, okay, where's the best place for my money? That's what I did with AMD, with Palo Alto. I am glad I did it. That's what I did when I moved from Salesforce to IREN. Again, where's the best place for my money just based on historical trends? So now I want to bring you to the October watch list. Okay. Oh, this is the Hood thing. I guess I had it open, but I wanted to bring you to the October watch list. And yeah, here on Substack, I have an October watch list. You can see it right there, October watch list. You can go and look at it. But you thought I forgot about it? Nah, I didn't forget about it. There are 2 crazy month to get date gains. And remember, we're 15 days into this. There's 2 crazy ones. One stock is up almost 50% in that watch list. Okay. Another ETF that I picked, it's up 20%. I'm going to give this one to you. Remember, August and September each had one stock that was up over 100% in the watch list. I published these watch lists at the beginning of the month. So if you want access to that watch list, it's a paid one. But there's one that's up almost 20%. And let me take you through the thought process that I did. I saw biotechs. Biotech stocks, medical stocks, whatever, IBB. Again, I said, ARCG, you're in the 4-hour algorithm as of August 22nd, and October, it's still moving. And I said, this pullback is an opportunity. I said, I think it's going to turn around. Well, it did. Again, risk reward. I discovered the trend, gave people 3 ETFs. This one is up close to 20%. The other ETFs are up 10% and 7%. You can look at the weekly chart on this one, okay? It was weak. It's still weak. We've just crossed the 200-day. If that 200-day starts to turn positive and we continue to go, again, back to the beginning of the podcast, if we start to go like we were in 2020 and 2021, which ironically, the lows are right where you are from COVID, and we start this trend back up, this one got all the way to $110 and you're trading at 32. Is it that good? I don't know. I'm not into this one. I bought genomics back here. I held on to it, I think, until about 2022. So I didn't have that big of gains, but I held this one since 2019. So as it crossed that 200-day, I started to get out. Again, it's a thesis. It's finding the value in the stocks that you like. And I'll tell you, one of the people that I follow is Hamid. I'm a fan of Hamid, and FYI, Dustin is partner on this podcast. Dustin, I talk with all the time about Savvy Trader. They've been great to work with. They have a new podcast called, Buy, Hold, Rant. This was a great episode yesterday. Why? Because Hamid's portfolio is up over 140% this year. Don't ignore him. He's a solid investor in this market. I don't follow his trades, but I like reading about them, and it's free on Savvy Trader. So go to Savvy Trader, follow Hamid. And by the way, if you go and listen to this episode, just drop a comment. Hey, Gary from Daily Stock Pick sent me over here. I loved it. It's a good listen. Now, I don't, one of Hamid's biggest investment, it's Rivian. He's a big believer in it, and he convinces me that it's a good one. Have I put my money into it? No, not yet. Why? Because I don't see the stock chart confirming what I want it to confirm. It's been choppy. I don't see it moving up. I see it going sideways. And until I start to see an upward movement, I'm not going to get into this one. And the fundamentals on Rivian are not great. They're just not really that good. You can see the valuation of D. It's gone down from 6 months ago. Growth, B. Profitability, D-. It's gone up since 6 months ago. Momentum, to C+. It's not great. And the revisions are down. So while Hamid is out there, he's taking the risk. He may gain the reward. But I'm kind of like, it is what it is. But I'll tell you exactly what I think about this market. I'm in an AI market, and that's what I invest in. Taiwan Semi beat estimates, raised outlook. AI megatrend. Again, if we're not in an AI market, these guys wouldn't be printing so many chips. Remember, Taiwan Semi makes all the Broadcom chips. It makes all the AMD chips. It makes all the NVIDIA chips. It does all of that, and it makes all of Apple's chips. So again, the CEO on this call said conviction in the AI megatrend is strengthening. Going back to the beginning of the episode, you're not bullish enough. And by the way, Taiwan Semi, just so you're aware, if you looked at the quant, it's been a strong buy for a very long time. We can go and look at this. It's been a strong buy all the way back here. We can go 3 years and let's pull it up. When it really started being a strong buy, around $175, you've doubled. This is just, by the way, it was $175, not 3 years ago. This was March 6th and it dipped down. So you had the opportunity to buy this lower. Again, we are in an AI market. Do I own Taiwan Semi? No. Should I? Absolutely. Because I own some of these chip stocks. They make the chip stocks. So understand what you're getting yourself into when you buy this stuff. Now, Webbush, Dan Ives just went on an Asian vacation. Lord knows what he was doing out there, but he's talking to all the AI people. The Asia checks show bullish sentiment for the AI revolution, accelerating chip demand for NVIDIA. I think it accelerates the entire AI platform. So from building the data centers to renting the data centers to powering the data centers, again, It's all bullish. So that's my thought process. That's what I looked at yesterday. That's where I went down the rabbit hole. All of these tools are available on Linktree. Okay. You want my 4-hour algorithm because it got you into, Micron, earlier August. You want it because it got you into Taiwan Semi. You want it because it outbeats buy and hold on Tesla. You want it for any of those stocks. It's on Linktree. Go to Linktree, sign up for any annual plan. I don't give the 4-hour algorithm out, and I will explain it right now, okay? If you sign up for a 2-week trial, the reason you don't get the 4-hour algorithm is because you don't have enough time to actually enact trades in 2 weeks. Are there strategies on TrendSpider's store that you can use for 2 weeks? Absolutely. But the 4-hour algorithm, it took me 8 months to become comfortable with TrendSpider. When they started offering these shorter time frame subscriptions, I didn't agree with it. I said, I think people need the annual because it becomes ingrained in you. It is a comfort level that you have when you invest in a stock, and the 4-hour algorithm gives you an idea and says, I like this one. Okay, Hood may be bouncing back. We can look at Bank of America. Bank of America gave you buy here at 51. I said buy it under 50. Would I have bought it in anticipation of the 4-hour algorithm? Absolutely. I own this one at around $25, $30. I was saying it was a $30 stock. Today, I say it's a $50 stock. It might be a $60 stock if the price action proves it. Again, $50 has been a little bit of a resistance. This is a weekly. This goes all the way back to 2022. But again, these charts are what they are. And so it needs to be ingrained in your patterns. And it needs to be used. I tell people all the time, I make money when you sign up because I'm an affiliate. I do not want you learning technical trading on TrendSpider. I don't want you spending your money on TrendSpider until you have used charts on a free program like Webull, which you can get right down here. Join Webull, get 75 free stock. Again, join Webull, get a desktop program. Join Robinhood, get their gold and get their desktop program. Join Fidelity and get Active Trader Pro. Join whoever does Thinkorswim now. I think it might be Morgan Stanley. But get a free tool, a free charting tool. You need it. The one that I would say is by far the best deal out there is the bundle with Premium and Alpha Picks. You saw me use AI in Seeking Alpha. It actually gave me great answer on some of the small cap stuff. I've been using it for the past 2 days. I love it. It gives me as good answers as ChatGPT. I think it actually uses some of the premium features of ChatGPT and Perplexity that you don't have to pay for. It's included in your subscription. And FYI, they're not limiting like TrendSpider is with Sidekick. You only get like 25 or 50 in Sidekick, but this Premium and Alpha Picks portfolio bundle saves you $159. Again, it's on Linktree. It's the second link. And say you don't want Alpha Picks. You can get a free 7-day trial. Try out the AI. $30 off your Seeking Alpha membership. Again, the tools are out there. These are the ones that I use. These are the ones that have helped me succeed. But there's plenty of free ones. I gave you plenty of free ones today. They weren't all, Perplexity, 100% free. I use that all the time. And FinViz, I used FinViz for years. And I used Active Trader Pro for years. So if you have any questions, hit me up. Again, everything's on Linktree, even my email address. I'll talk to you later.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.